Hi and welcome to On the Money. The Reserve Bank of Australia has cut interest rates to a record low level of just 1%. But financial experts expect the RBA will continue to cut rates in 2019. According to a recent RBA cash rate survey conducted by Finder, 73% of experts surveyed expect the Reserve Bank will continue cutting until the cash rate hits 0.75% or lower. The Australian economy only grew 0.4% in the March quarter of 2019, the slowest rate of growth since the end of the global financial crisis in 2009. In addition, the broader property market slid 0.2% in June, bringing the year-to-date change in value to a negative 6.9% total. The government's full tax package passed in the House of Representatives and the Senate. The personal income tax cuts total $158 billion and were introduced in the 2019 federal budget and build on tax cuts introduced in the 2018 federal budget. Labor voted for the controversial package of tax cuts following continued political pressure from the Liberal Party, which claimed its election win gave it a mandate for tax cuts. Stage 1 of the tax cuts implemented now will provide immediate tax relief of up to $1,080 for low and middle income earners. Stage 2 of the tax cuts will increase the 32.5% tax bracket to include those earning up to $120,000 from $90,000, while Stage 3, to be introduced in financial year 2024-25, would see a flat tax rate of 30% introduced for all Australians earning between $45,000 and $200,000. Australia's responsible investment market hit $980 billion in funds under management last year, jumping 13% from 2017. The number of assets that meet responsible investment principles in Australia now make up 44% of Australia's $2.25 trillion market, a jump of more than 400% from 5 years ago, according to a new report by the Responsible Investment Association of Australasia, or RIAA. While responsible investing trends have been slower to pick up in Australia compared to other countries, such as the United States, a bigger spotlight on climate change, as well as findings from the Financial Services Royal Commission, have propelled the topic into the public eye in recent years. They're also quite profitable. Ethical funds are outperforming traditional funds with average annual returns of 6.43% over 5 years and 12.39% over the last decade. Nick and Josie Yeomans invested tens of thousands of dollars in a scam Bitcoin investment site, coinexx.org. After adding more than $20,000 to their account and withdrawing funds over a period of months, their confidence grew. Then suddenly they were hit with steep fees. Their returns shrank and roadblocks were placed between them and their money. The Canberra couple are among a growing number of Australians falling victim to investment scams lurking behind the volatile cryptocurrency market. According to the Australian Competition and Consumer Commission's Scamwatch, investment scams involving Bitcoin and other cryptocurrencies have increased markedly in 2019. By May 31, Australians had reported more losses to investment scams mentioning cryptocurrency than they had for all of 2018. According to a report created by Roy Morgan, Australia's paid workforce have 140 million days of annual leave, and they're taking less and less of it every year. This data is based on in-depth interviews conducted face-to-face with over 50,000 consumers. Of those surveyed, more than a quarter of the nation's 10.9 million paid workers have 4 or more weeks' worth of annual leave accrued, with 13.2% having more than 5 weeks. According to further research, the average Aussie only takes 14 of their 20 days of annual leave each year, leaving 6 days unused. This signifies a downward trend over the past 10 years. In 2009, Aussies only left 3.5 days unused. According to Roy Morgan CEO Michelle Levine, if Australians used their accrued leave to take holidays within the country, this could provide a potential boost to the economy. The Australian Banking Association has created a new set of rules and strict new penalties to try to win back trust after an extended period of controversies highlighted during the Royal Commission. Key benefits to consumers include basic, low or no-fee account options, stronger enforcement and easier credit card management. Small businesses will also benefit from simplified loan contracts with fewer conditions, longer notice periods for loan condition changes, and improved communication and transparency when using valuers and insolvency practitioners. The new banking code is the first industry code to be approved by ASIC, and the Independent Banking Code Compliance Committee, or BCCC, will investigate alleged breaches of the code. The Big Four banks will need to raise about $50 billion by issuing types of bonds designed to absorb losses in a crisis, as the regulator seeks to limit the chance of any future taxpayer bailouts. The Australian Prudential Regulation Authority, or APRA, said it would require banks to lift their total capital requirement by 3 percentage points of risk-weighted assets by the start of 2024. Banks expect to meet the requirement mostly with Tier 2 capital, which refers to bonds that can be written off or converted into equity in the event of a crisis. Each of the Big Four noted APRA's plan and estimated the impact on their businesses based on their current balance sheet. NAB said the change was equal to a $12.1 billion increase in its total capital. ANZ Bank said it represented a $12 billion lift, and Westpac and Commonwealth Bank said it represented a $13 billion increase in their total capital. That wraps up this episode of On the Money. If you'd like further information about these or other accounting issues, we welcome your call or email. See you next time.